Welcome to Talk Tickers. We cut through the noise of earnings calls to give you the insights that really matter.
Yeah, that's right.
Today, we're diving into Insulet Corporation. Their first quarter 2025 results just dropped.
And it looks like a strong start to the year for them.
Definitely. In short, a really solid quarter. We saw significant revenue growth, impressive margin expansion too.
And they raised their outlook for the rest of the year, which is always a good sign.
Absolutely. So let's, unpack how they pulled this off and what it might signal moving forward.
Okay, so let's look at the headline numbers first. Q1 2025, revenue hit $569 million.
Which is a big jump, right?
Yeah, a substantial 30% increase compared to the same time last year, mostly driven by Omnipod.
Omnipod growth was, 29% overall?
29% total Omnipod growth, exactly.
And drilling down into that, the U.S. Omnipod revenue, that grew 26%.
Right. Though it's worth noting, like you said, that was impacted a bit by some stocking dynamics from last year.
And rebate timing, yeah. Offsetting factors.
Exactly. But then you look internationally.
Huge growth there.
Yeah. International Omnipod revenue climbed 36%. Really impressive.
It really highlights that growing global demand, doesn't it?
It does. And beyond just revenue, the profitability looks very healthy.
Tell us about the margins.
Well, gross margin hit 71.9%. That's up 240 basis points.
Wow, 2.4 percentage points. That's significant.
It really is. And adjusted operating margin was strong too, 16.4%. Adjusted EBITDA at 23.5%.
So good indicators of efficiency there.
Absolutely. And crucially, they're getting new customers in the door.
That's key for growth.
Right. Strong growth in new customer starts, both in the U.S. and internationally.
Yeah.
That's sequentially and year over year.
And what kind of customers? Are they converting from injections?
Yeah. In the U.S., over 85% of the new starts came from people previously using multiple daily injections, or MDI.
Okay.
Here's a big one. Over 30% of those U.S. new starts were actually type 2 diabetes patients.
That is significant, really moving into that market.
It seems like it's a considerable expansion for them.
And all this strong performance, it seems to have boosted their confidence, wouldn't you say?
I think so, yeah. Based on Q1, they've actually raised their full year guidance for both revenue and gross margin.
Signaling some real optimism then.
Seems that way. They expect the momentum to continue.
Okay, so let's dive a bit deeper now. There was a leadership change, right? Ashley McCoy is the new president and CEO.
That's right, succeeding Jim Hollingshead.
What's the thinking there? What does the board see in her?
Well, the board's statement expressed strong confidence in her ability to lead the next phase of growth.
Focusing on?
Specifically mentioning type 1, type 2, and international markets. Her background seems key.
How so?
She comes from consumer health and med tech, and apparently has a strong track record in scaling businesses, driving innovation, focusing on people.
So a new leader, but it sounds like the strategy itself isn't changing dramatically.
Precisely. The core priorities seem consistent. Keep advancing innovation, drive that U.S. growth in both type 1 and type 2.
And keep pushing internationally.
Exactly. The board seems to feel she's the right person to execute that existing strategy effectively.
Okay, let's circle back to those financials then, particularly that gross margin expansion. What really drove that improvement?
They pointed mainly to efficiencies in manufacturing and their supply chain.
Makes sense.
And also just the benefits of higher volume, economies of scale kicking in. Seems like their investments in automation and their diverse manufacturing sites are paying off.
They mentioned tariffs too. What's the deal there?
Yeah, they estimate about a 50 basis point hit to gross margin for the year from tariffs, mostly related to China, it seems.
Okay, but they're raising guidance anyway.
Right. They sound confident that improvements in scale and efficiency will more than offset that tariff impact. That's why they lifted the full year gross margin guidance to around 71%.
Okay. It also looks like they're spending more investing in growth.
Yes, definitely. Operating expenses are up. They mentioned investments in R&D, expanding the commercial teams.
To reach more doctors, presumably. Exactly, more healthcare professionals. And also ongoing clinical studies like Radiance and Stride. These are really strategic bets on future products and market access.
But despite that spending, the operating margin outlook is still pretty good.
That's right. They reaffirmed the adjusted operating margin guidance at about 16.5%.
Which is still a nice increase year over year.
Yeah, about 160 basis points expansion. And they actually expect margins to be stronger in the second half of the year.
As revenue grows and efficiencies scale up.
That seems to be the expectation, yeah. leveraging those operational gains.
Got it. And there were some updates on the financial structure side too, right? Debt, capital allocation.
Yeah, they've been proactive there. Issued some senior unsecured notes, increased their revolving credit facility.
Improving flexibility.
Right. Now, that is expected to increase their net interest expense by about $30 million this year, 2025.
Okay.
But it gives them more financial runway. They also mentioned their non-GAAP tax rate should be in the 20-25% range.
And what about shareholder returns? Any buybacks? Yes. The board authorized a share repurchase program up to $125 million worth of common stock through the end of 2026.
Is that for boosting the stock price or?
They said it's primarily intended to offset the dilution from stock-based compensation.
Oh, okay. Makes sense.
And they also expect free cash flow to keep increasing.
Okay, let's shift gears to the product itself, Omnipod 5. How's the adoption looking?
Still very strong in the U.S.
Yeah.
Especially now with the Dexcom G7 integration live.
And they mentioned Abbott's sensor, too.
Yeah, seeing encouraging early signs with the Abbott Freestyle Libre 2 Plus integration as well.
And the app, people using the iOS app.
Quite a lot, actually. Over 40% of eligible U.S. Omnipod 5 users are apparently on the iOS app now.
That's a pretty good uptick.
It is. And they expect the full market release of the iOS app integrated with G7 by the end of Q2. So soon.
And they're pushing to get this into more hands, reaching more doctors and patients.
Absolutely. Expanding the U.S. sales force, specifically targeting more type 2 patients.
How many prescribers do they have now?
Nearly 25,000 U.S. healthcare professionals prescribing Omnipod 5. That's a significant jump from last year.
And direct-to-consumer ads probably help, too.
For sure. Raising patient awareness.
What about outside the U.S. international progress?
They launched Omnipod 5 successfully in Canada and Switzerland. That brings the total international markets up to 13 now.
Any new regions planned?
Yes, they're targeting the Middle East for launch sometime between late 2025 and early 2026.
Interesting. And sensor integration is moving forward internationally, too.
Yeah, the G7 integration is now live in the UK and the Netherlands, so progress on that front as well.
Okay, let's talk more about that type 2 market. You said over 30% of new U.S. starts are type 2. That feels like a big deal.
It really is. It represents a massive opportunity for them, and they seem to be getting real traction.
What's their strategy there? How are they reaching these patients?
It seems multi-pronged.
Yeah.
Educating healthcare providers on the value prop for type 2.
Which might be different than for type 1.
Could be. Also, that dedicated sales force expansion we mentioned, targeting type 2 prescribers and direct-to-consumer advertising.
How are these type 2 users sticking with the product compared to the type 1 base? Any difference in retention?
They mentioned that early retention rates for type 2 users are a bit lower than type 1.
Okay. Is that expected?
Yeah, they said it's still strong overall and basically in line with what they expected. And apparently the actual product utilization rate is similar between the groups.
Good to know.
Yeah.
Okay, one last area, manufacturing. How's their supply chain holding up with all this growth?
Seems pretty robust. They highlighted their diversified footprint, facilities in the U.S., China, and Malaysia.
Spreading the risk.
Exactly. Gives them resilience. Most U.S. sales are still supported by the Massachusetts facility, though.
And the Malaysia plant, is that ramping up?
Yes. They said the ramp is on track, and they expect it to start being accretive to margins, helping margins in the third quarter of this year.
Okay. So stepping back, looking at the whole picture from this earnings call, what's the main takeaway for someone following the company?
I think the key takeaway is really about continued momentum. Insulet is showing strong, sustained growth.
Driven mainly by Omnipod 5.
Absolutely. The rollout and adoption, both in the U.S. and internationally, is clearly the main engine right now.
And that type 2 market push seems critical.
Definitely. It's a huge potential expansion area. They mentioned current penetrations maybe around 5%. What potential they think to double or triple that?
So lots of runway there.
Potentially, yes. And underlying all this is their focus on innovation and manufacturing efficiency, which is supporting those healthy margins and giving them operating leverage.
So the strong Q1 results, the raised guidance, it all points towards a pretty positive trajectory.
That seems to be the message the company is conveying, yes.
Yeah.
Confidence in continued strong performance.
All right, now for our favorite segment. This is not financial advice, where we toss around some, let's call them outrageous but plausible trade ideas based on what we've heard.
Okay, let's speculate a bit.
What's one idea that springs to mind?
Well, thinking about that big push into the type 2 market, Insulet is grabbing over 30% of new starts there. Adoption of pumps and automated systems in type 2 is still relatively low compared to type 1, right?
Yeah, much more room to grow.
So here's a thought. Maybe a long position in insulin paired with a short position in a company that's heavily reliant on, say, traditional type 2 medications like oral drugs.
Interesting. What's the logic?
The thinking is, if Omnipod 5 really takes off in the type 2 space, it could maybe start eating into the market share or growth trajectory of some traditional drug therapies over time.
So Insulet benefits disproportionately, while the traditional pharma company feels some pressure.
Potentially. It's a bet on that technology shift within type 2 diabetes management. But again, purely hypothetical, not advice.
It's definitely not advice. Got another one.
Okay, how about this? Think about that Middle East expansion plan for late 25, early 26.
Right, new territory for them.
And likely a market with a relatively lower penetration of advanced diabetes tech compared to, say, the US or Western Europe.
Okay, so maybe faster initial growth potential.
Perhaps. So you could consider something like a long-dated call option on Insulet. It's a higher risk play for sure.
Betting on what exactly?
Betting that they successfully enter the Middle East, gain traction, and see significant revenue growth from that region over the next couple of years. It's a gamble on their execution in a new market.
Higher risk, higher potential reward, as they say.
Exactly. Purely speculative, of course.
Absolutely. Remember, everyone, these are just thought experiments, definitely not financial advice. Always, always do your own homework before making any investment decisions.
So wrapping up, Insulet's Q1 paints a picture of a company firing on, well, quite a few cylinders. Strong momentum from Omnipod 5.
The type 2 expansion looks promising.
And international growth continues.
Yeah.
Lots of focus areas, but they seem to be executing well.
So the big questions remain. Can they keep up this pace, especially in the competitive type 2 market? And how will that Middle East expansion really unfold? We'd love to hear your thoughts.
Join the conversation online, share your insights.
Thanks for tuning in to Talk Tickers.